So friends, question comes, can I post any entry, can I made any entry into electronic credit ledger by just logging into GST portal, opening credit ledger and post an entry? Not possible. It is not possible. Big no. In electronic credit ledger, I told you entry comes through your procurement, through your purchases only, and through your sale, through your refund application. So there is set mechanism there. Whenever you are posting any entry into electronic credit ledger, it cannot be entered straight away. It will be entered, it will be updated through some other document, through some other window on GST portal. And other windows or other options are, or other medium is your returns. The returns can be GSTR1, that is liability, GSTR2A, 2B or 3B, your claims for ITC. So we will study these also. So this way electronic credit ledger is maintained, which shows you, which give you how much is ITC available to you, how much tax liability you are having, and if you set off these liability against your ITC ledger, then how much balance is available to you, and if your liability is more than what balance is available in credit ledger, then you have to pay in cash. Friends, in accounting, it's a normal practice that accounts, though are maintained very carefully, still due to some other reason, there are mistakes. There are wrong entry passed by maybe because of clerical mistake or maybe some wrong interpretation of the transaction. And same thing can happen at GST portal also. Because GST came in 1st July 2017 and because people were not aware of GST concept, because it was altogether a different story of indirect taxes. So people were not aware of the and failed to map the transaction as per GST portal or GST law. So they made so many mistakes, and mistakes happen in electronic credit ledger also. So law says, if there is any discrepancy in your electronic credit ledger, discrepancy means as per your calculation, your credit balance should be of 1 lakh rupees. As per your calculation, you must have this much of balance in your credit ledger at GST portal, but it's showing 90,000 rupees. So it's showing 10 amount. Or other way also. It can be other way also. It may case where it is showing 1,10,000 rupees. Though it is good for you that you are having good balance, but technically it is wrong and legally also it is wrong, and it will be recovered from you, then it will be recovered with interest. So better maintain your accurate actual balance with all logics and evidence. So there can be a case when there is a discrepancy in your credit ledger, then a registered person, means in whose credit ledger, because credit ledger is maintained by for each and every registered person who is having GST number. It is registered person wise. So person who is having any discrepancy, who has noticed any discrepancy in credit ledger, shall, upon noticing any discrepancy in electronic credit ledger, communicate the same to officer of his jurisdiction to whom he is reporting or who is having jurisdiction in on his business in GST PMT 04 form. It's an online form available on GST portal. Fill this form and submit it to the GST portal, and it will, when you will submit it, it will go to that concerned officer to look into. So they will check why it has happened. If it is because of some clerical or maybe some other mistake at their end, or they will refer this case to GST Network Limited. This is the company responsible for the functioning of GST portal. We will talk about this GST network also, GSTN. So they will look into and see and correct the things to 1 lakh rupees. So you have to give evidence also from that. So the time has gone when if there is any discrepancy in record of sale tax department or excise department, you approach their local officer and they solve the problem. Now things has changed. You need not to go to your concerned officer straightway. You have to move the things through GST portal in prescribed format. Submit it. It may take 24 hours or 48 hours, and your problem will be resolved and you will be intimated accordingly. Friends, in my previous slides or previous sessions, I mentioned you that ITC is a balance available to you to meet your tax liability, subject to the conditions and mentioned in section 16, section 17. So, all your procurements where you have paid GST, not possible that you are having ITC benefit on each and every bill. I told you that if you purchase a car, ITC is not available. If you construct a building, tax paid on building material is not available as ITC. So that much of amount you have to reduce. So given any given point of time, if you procured, suppose 1 lakh rupees of procurements where ITC amount is 1 lakh, total tax paid by you is 1 lakh rupees to your suppliers for so many inputs, and out of these, tax on car is 5,000 rupees, tax on building material is 2,000 rupees, like this. So this 7,000 rupees ITC is not available to you because of section 16 or section 17, or 3,000 rupees is used for some exempted item, as I told you in my previous slide. So here total 10,000 rupees ITC is not available to you. So net ITC available is 90,000. So you can pay your tax liability up to 90,000 rupees straightway by using this amount. There is no problem. But friends, there is a rule in these sections, Rule 86A of CGST Act. This rule has some more conditions on your usage of ITC, availing of your ITC benefit. So it gives powers to officers of the department, and what it says Rule 86 CGST 2017 empowers the commissioner or its authorized officer. Commissioner means CGST office in charge or state government in charge in the state. So commissioner of CGST or commissioner of SGST has power through this rule, and if they have some information, if they have some evidence at their end, and they believe that you are availing ITC without following proper rules, or there is some fraudulent activities going on through your business, and you are using this balance, or you are using this balance which is not permitted as per law, but you have used that balance. If such type of things has happened in your business, in your transactions, the officer to disallow debit electronic ledger means they can stop you debiting. Stop you debiting means stop you availing this benefit of ITC. They can stop you. They have access to GST portal where they will block that particular credit mechanism. You will not be able to pass entries through this electronic credit ledger against your tax liability. So such restriction shall be ceased to have effect after expiry of 1, means they can seize your account, block your account, block the transaction in your credit ledger up to 1 year. They have powers. If they found that some fraudulent activities are going on in your business, or you are, let's take again same example, if you have total ITC on your procurement, or you have paid 1 lakh rupees as tax on your procurement, and out of this 1 lakh rupees, 90,000 is on account of building material, car, or exempted goods. Because I told you, ITC is available only if your final product or your sale is subject to GST. If your sale is exempted from GST, you cannot avail ITC. So if that is the case where 90,000 out of this 1 lakh rupees is on account of building material, I told you building material, ITC is not available. On motor car or car having sitting capacity less than 13%, ITC is not available, or your exempted goods, ITC is not available, or 90,000 pertains to these items, and you have debited your credit ledger, electronic credit ledger by 60,000 rupees. Means you have used out of this 1 lakh 60,000 rupees to pay your tax liability. To pay your tax liability, you have done violation as per the law provision. You have done a fraud. So, in this situation, officers have power to block your credit ledger. And in that case, 60,000 you have already availed by wrong procedure. You need to reverse it. You have to pay 60,000 rupees back to the government along with interest on it. Along with interest. And in addition to that, you are supposed to pay your tax also. So friends, in nutshell, to utilize this credit ledger balance, you need to fulfill some things. It means you have to keep something in mind when you are availing benefit of this electronic credit ledger or using this credit ledger for your tax liability. And it says taxable person. Definitely means electronic credit ledger is of taxable person only. It cannot be of an unregistered person or an individual. Same conditions which we read in section 16. He must have tax invoice with him because he has procured goods. So he must have goods with him. I told you that electronic credit ledger or ledgers are updated through GST portal. So your electronic credit ledger must be updated through GST portal, and the invoices raised by your supplier will also be communicated to you. And all invoices which have been raised to you by your supplier will be depicted in GSTR 2A and 2B. We will discuss when returns will come. Must in possession, goods must be practically delivered to them, to the buyer. Supplier has actually paid this tax to the government. Keeping tax with you is a crime. And you have also filed your own return. Your tax liability you have declared to the government. How much is your tax liability? That's why, and so that if you have tax liability, so that you can use your ITC balance. So friends, there are so many conditions when you are using your ITC, and if you are adopting wrong practices, your registration can be cancelled, your electronic ledger can be blocked, and action will be taken against you. Because payment of GST on your procurement, on your purchases is simple, but taking benefit of it to meet your own tax liability is tough. So you have to comply with each and every procedure, each and every provision of the law when you are availing this benefit, because ultimately what happened, whatever ITC you are using, basically you are using government money, because tax was paid by your supplier to the government and it is now in government account, and whenever you are withdrawing this amount for your own benefit, for your own payment of tax, you are basically withdrawing this money from government. So government money is very tough to use. So friends, there is another rule, 86B under CGST Act. It further imposes some conditions on use of ITC. These are checks and balances under system in the GST law, so that ITC cannot be misused. People use this money fraudulently or wrongly. So provisions are so strict. So is the case under 86B, and it says 86B deals with the restrictions on use of amount available in electronic credit ledger beyond 99%. So means in general, law says you can use your net ITC available, eligible ITC available to you in electronic credit ledger without any problem, but not beyond 99%. So 1% ITC, if you have any tax liability, 99% you can use from your credit ledger, balance 1% you are supposed to pay from or by cash. You need to pay by cash only. So this is a new provision inserted in 2020, applicable from 1st January 2021. So before 1st January 2021 means up to 31st December 2020, there was a provision of using 100% from electronic credit ledgers. There is no issue. You can pay 100% tax from that. But after that, only up to 99% you can pay from there. 1% remaining will be paid from cash only. Further, it says 99% of your output tax liability of that particular tax period. Then rule is applicable to registered person having taxable value of supply more than. So it is not, this rule is not applicable to small traders, small businessmen. Any businessman, any registered person, taxable person having turnover more than 50 lakh rupees a month, this rule will be applicable, because when he has more than 50 lakh rupees of turnover, his tax liability will be more. So this person has been restricted to use or pay tax liability 100% from ITC. He can use ITC up to 99% of your tax liability, and 1% he is supposed to pay in cash only. So these are different restrictions imposed in GST to avail the benefit of ITC. So that's why I'm once again repeating it, that whenever you are using your ITC, make sure you are correct in your understanding to the law. Friends, in last slide we mentioned that 86B rule is applicable where monthly turnover of a person is 50 lakh rupees or more. It further says, this rule further says, this restriction of under these rules are not applicable. The restriction of 86B rule is not applicable to following class of people. So it makes things more complicated. It is not easy to understand. So we must have all restrictions related to ITC in our mind. Only then we will be able to comply with the law. Otherwise, there are 100% chances that we will commit a mistake. So it says, following persons having paid income tax more than 1 lakh in preceding 2 financial years under Income Tax Act, 86B will not be applicable. So any person as listed here, proprietor or karta, managing director, any 2 partners, whole-time directors, members of managing committee of association, board of trustees, etc., etc. If all these people have paid income tax, we are talking about GST, we are reading GST, but provision says if any of the following people, those are having business, if they have paid income tax more than 1 lakh rupees in previous 2 years under Income Tax Act, then section of 86B is not applicable even if your turnover is more than 50 lakh rupees. Further, if any registered person has received refund, it further says if any business house are getting refunds because of their exports, zero rated goods means export. So any business house who is getting 1 lakh rupees refund in previous times, this restriction of 99% is not applicable on that business house also. Further it says, exporters claiming refund of ITC on export or inverted duty structure for more than 1 lakh rupees, again related with the refund under income, this GST under section 54. If they are having refunds more than 1 lakh rupees, this restriction of 99% is not applicable. Further, registered person has discharged his tax liability towards outward tax through the electronic cash ledger for an amount which is in excess of 1% of the total. So, is another condition. If you are meeting this condition, then again this 86B rule is not applicable to you. Registered person like government department, public sector undertakings, local authorities, statutory bodies, this rule is not applicable. So, such type of provisions make sometimes law complicated, but as a student of law, we need to understand these concepts and need to understand the business transaction, need to understand the constitution of the business, and then accordingly to act. So, if government has imposed some restriction through some rules, through some notifications, through some circulars, if these such type of restrictions is having any major impact or reverse impact on business or the revenue, then there are power with the commissioner or the officer authorized to give some relaxation. So, if any particular business house or a particular person thinks so that this restriction is creating hurdle or is not ease of doing business or creating complication for them, they can approach commissioner for relaxation, and commissioner, if he is satisfied, they can give relaxation to that particular business house, that particular taxpayer, that particular taxable person to have a relief from this 86B. And in this case, if relaxation is given, then this fellow will be in a position to use 100% amount of ITC available to him to meet his tax liability for that particular period. So, relaxation can be there provided commissioner should be satisfied with the plea. So, friends, I mentioned earlier also that in GST everything is very clear, transparent, in set system, and we have to follow that set system for dealing with the business transaction when you are complying under the GST law. So, yes, there is a set procedure to have ITC benefit and to use electronic credit ledger. So, it says in GST when we have tax liability, the tax liability will be for IGST, will be for CGST, and will be for SGST or UTGST. So, these three taxes we are supposed to pay under GST. If it is interstate transaction, IGST is applicable, and if it is intrastate transaction, CGST and SGST or UTGST is applicable. So, by having these transactions, if you have by having your sale in a particular month, let's take example of July month is there, and in this July month my IGST liability is for rupees 1000, my CGST liability is of 500, my SGST or UTGST liability is 500. So, friends, for IGST we have separate mechanism, for CGST and SGST payment we have separate mechanism under GST at GST portal. So, in a particular month of July, we have though total liability of 2000 rupees, but if we will say that I will pay 2000 straightway to the government, my work is over. No, friends. you need to pay 1000 separately in different account head, 500 separately in different account head, and 500 separately in different account head. Because when you will pay IGST through GST portal or through your filing returns, it will go to central pool. And from central pool, it will be distributed to central government and the respective state where goods have been consumed. And if it is intrastate transaction, 500 will go to central GST account and 500 will go to state GST account through your return only or through your challan if you are paying in cash. And if you are using your credit ledger ITC, then again accordingly this amount will be set off. So same thing is mentioning over here that whenever you are having liability, your liability is 1000 rupees for IGST. So it says your IGST liability must be set off from your IGST balance in your electronic credit ledger. So it means what? It means your electronic credit ledger is maintained separately for IGST, for CGST and for state GST. So electronic ledger has 3 parts. It is not showing all together separately. So electronic credit ledger for IGST balance, electronic credit ledger for CGST balance, electronic credit ledger for state GST balance. So whenever you are having IGST liability with you, you have sold your goods in interstate transaction out of the state and your IGST liability will be there. And whenever, if in this particular case, we have IGST liability of 1000 rupees and in your electronic credit ledger, IGST balance is 800 rupees only. So you can use straightway this balance of IGST against this liability and 200 rupees will be paid in cash. So law says IGST liability to be used first for the payment of IGST. So IGST credit ledger can be used only first for IGST. If balance left, the same may be used for payment of CGST and SGST. So in this case, we have only 800 rupees credit balance, but my liability is 1000 rupees. So there is no balance left and IGST I am paying in 100 rupees, 200 rupees in cash. So I cannot use any balance from IGST for the payment of CGST and SGST. But if here I have balance of 1800 rupees in my electronic credit ledger under IGST category, I have balance of 1800 rupees and 1000 is my liability. So here I have 800 rupees excess after meeting my tax liability of IGST during July. So this 800 rupees which is in excess I am having can be used for the payment of these liabilities. I can use IGST can be used for payment of IGST, for the payment of CGST, for the payment of SGST. But first use IGST balance against IGST tax liability only. And if there is not IGST tax liability, then straightway you can use for CGST or SGST. There is no issue. Further, CGST. If you have CGST balance with you in your electronic credit ledger, here suppose we have 2000 rupees CGST in my electronic credit ledger. So CGST, if you are having, first use this CGST balance to make the payment of CGST tax. So straightway pay 500 rupees out of this 2000 rupees and remaining you are having 1500 rupees over here. And this 1500 rupees can be used if it is required for the payment of IGST. This 1500 rupees which is in excess of your liability, because liability is 500, you are having balance of 2000 rupees. So 1500 rupees you are having with you. So this 1500 rupees can be used for payment of IGST, and this amount of 1500 rupees you cannot use against SGST. So rule is CGST cannot be used for state GST or UT GST. This is basic rule for payment of taxes from electronic credit ledger. Similarly, friends, state GST can be used for state GST payment, can be used for IGST payment, but cannot be used for CGST payment. IGST can be used for IGST, CGST and SGST. CGST can be used for CGST and then for IGST, and SGST can be used for payment of SGST first, and if balance is there, it can be used for IGST, but it cannot be used for CGST. So there is set procedure under law to utilize your ITC ledgers or ITC balance in your electronic credit ledger, and electronic credit ledger is maintained separately for all taxes. Because when you are procuring things, you are procuring goods from open market, in some of the cases you might be paying IGST, and in some of the cases you might be paying CGST, SGST under intrastate transactions. So we have to keep that in mind, that whenever you are meeting our liability while using electronic credit ledger, it should be in set procedure. So CGST can't be used for SGST, UTGST or vice versa. We have to keep these things in mind, otherwise it will create problem for us.